Everybody's talking about a property crash in 2026, and if you've seen the pipeline numbers, you'll know why. In Dubai alone, we're looking at over 76,000 new units hitting the market in a single year. Now, I've spent years analysing these markets for investors, and not every area is going to sink, all right? Some will hold steady, continue to grow, while others are heading straight for what we call a little bit of oversupply trouble. And if you put your money in the wrong place, you could end up locked into an apartment that doesn't rise in value, you'll struggle to find tenants, and could potentially bleed cash every single month. So in this video, I'm going to show you a particular type of investment that is primed to hold strong in 2026, and 3 areas that are at serious risk of a correction, plus the simple way to spot whether a community belongs on the safe list or the crash list. Now, before we get into the list, I want to clear up a bit of a misconception. You see, a lot of people think if the Dubai or the Abu Dhabi market is moving up, then every single area will just rise with it. But that's not really how it works over here. See, the way I look at it is this, right? Dubai is one big market, sure, but inside of it, you've got all these smaller markets, almost like little cities within the major city, right? Each one has its own supply, its own demand, and basically different buyer psychology. All right, and so some are going to do really well and others might just flatline, and a few, to be honest, will dip. Just to be clear, this isn't about scaremongering or saying things are going to crash and burn. Not at all. I mean, look at the growth in Dubai. It's about looking at the data, combining it with my local on-the-ground knowledge after years of experience, and showing you where smart money is moving to and where to invest now. So the first area on today's list is Business Bay. Now, at first glance, of course, Business Bay, central. It's located right behind downtown. Categorically, a lot of people live here. There's a lot of commercial space here. And yes, it has been a very good investment for a lot of people over the years. But here's the thing, right? In 2026, we expect an influx of 12,000 new units. Now, if we look at the current data, it shows us where most of the units are situated. So for example, there are over 8,500 studios. There are 6,500 one-beds. But there's a lot less 2 and 3 beds. Now, in Business Bay, there have been some amazing projects, some very successful projects. One of the standout ones for me was Peninsula, okay, by Select Group. And then you've got more upmarket residences like the Lana, you know. You've got quite a few branded residences coming to the market, but Lana is one of the standouts by Omnia. But then if we look at what the data is saying now, if we take the average price per square foot of ready units in this location, it's 1,700 dirhams across the last year. Now, if we look at the average price of off-plan projects launching, that's 2,500 dirhams per square foot. That's an 800 dirhams per square foot difference. Now, you've got to remember that all of the data of all of the branded residences, you know, the Bugatti, the Jacob & Co., you know, all the luxury residents, they're also combining that data. So it's not fair to say that it's super accurate, you know. But 800 dirhams is a big jump, all right? It's a big jump, that's a big difference. And what I say to people now, especially investors, is that if you're buying into this market in this location, you've either got to be buying on the canal, but to be honest, even the prices on here are getting very expensive. But then also, what is most in demand? We know that there is a large supply of studios and one-beds. Would I be buying an off-plan studio or a one-bed now in this location? Probably not. And if I would, I'd have to check the price per square foot. Now, I'm not putting the project down, but let's say Bugatti Skyrise, there are going to be over 1,000 studios alone in this project, all handing over at the same time. Price per square foot, over 3,000. Now, it's up to you how you analyze that data. But in my opinion, what's going to happen, I think, in Business Bay, is we're going to see a lot of these, you know, standard units come to the market. People aren't going to be able to rent them down. It's going to drive the rental prices down, which coincidentally ends up driving the actual selling price down. So what you need to understand as well is that the average rental yield in these locations, when you're buying at this price, is probably not going to exceed 5%, okay? So if an investor comes to me and says, I want to buy a one-bed in Business Bay, politely I would say I'm probably not the right agent to do that, okay? So now, to take away from this, my actionable advice on Business Bay. Is it a bad investment? Absolutely not. If you buy the right project for the right price. Now, of course, you can say that about anywhere, but it's clear studios and one-beds are oversaturated. There is a bigger demand for 2 and 3 bedrooms, okay? And I know this personally because I've been in a studio and a one-bed, and the demand and the numbers are showing us that those are the better priced units, okay? Now, in terms of residences, you can't be paying 4,000 dirhams per square foot for a pretty standard building. That's another point you've got to take away. You've got to be calculative with how much you're paying for it. All right, so I do see Business Bay becoming oversaturated with very average products for an expensive price. That's where it's gonna go. That's where you're gonna go wrong as an investor in Business Bay. Now, let's talk about the next area. Let's go. Now, the next area, you were probably all expecting it. This is an area where I actually used to live for 2 years when I first moved to Dubai. It's JVC, Jumeirah Village Circle. So for anyone that doesn't know this area, it's situated just behind sort of, we can say Emirates Hills, but you know, there's a lot of road between there and there's a, you know, couple of entrances in and out. Now, JVC is one of those places where, to be honest, I class it as affordable luxury. It's probably one of the best places to live if, you know, you've got a lower budget and you're trying to get a really nice 1-bedroom or 2-bedroom for a good price, because you're going to be outpriced at the main cities, Dubai, downtown, Dubai Marina, and probably even Dubai Hills. JVC is that next best thing. However, let's get into the numbers. All right, so some key points here. The current resale price is around 1,000 to 1,200 dirhams per square foot. And then the current off plan we're seeing now that's launching is somewhere between 1,400 and 1,800. So you'll notice a similar pattern in the areas that I'm talking about. The difference between the resale and the off plan, it's starting to grow. So it actually means that it's becoming more expensive in certain areas to buy the off plan than it is to buy in the resale market, which can be justified depending on what you're buying. If it's a branded residence, is it luxury? Does it offer more than what the community has to offer? All these things. Now with JVC, there are 30,000 new units planned, and there have been 11,000 units since 2023. It's not all that bad, because actually the population of JVC is exceeding 80,000 people, and you would know that if you live in Dubai. A lot of people live in JVC. So what I'm trying to get at is this. Moving forward, would I invest in JVC now? In the off-plan market, no. Maybe in the resale, all right? Any one of my clients, and I've sold a lot of properties in JVC, who bought between 2021, 2022, and even 2023, okay? They've all made money. They've all made money, and you know, they're laughing to the bank. Rental yields are over 8, 9, 10%. It's categorically one of the best places for rental yield if you buy at the right price. But if you come to me, Joe, I'm looking for something in JVC, would I be the right person? No. Would I sell you something in JVC? No. Not now, off plan. Because this does not get justified. And what we've seen now, and I mean this is from personal experience, studios, very difficult to resell. 1-beds, very difficult to resell, and actually hard to rent out. All right. But what is good? Well, I actually had 2 units in 2 different developments, 2 bedrooms they were. And one of them was over 1,700 square foot, okay, size-wise. And then the other one was 1,100 square foot, okay, so it was a small one, all right? So these are properties that I actually sold. And what happened was the 1,700 square foot one rented out within probably a week. And the other one was a bit smaller, still a very nice development, but it took about 2 months. And the reason for that, in my opinion, is size matters, especially if someone is going to be living in JVC, it's because they can't afford or have sacrificed the sort of idea to live in one of the, I would say, nicer communities, you know, like rather than a Dubai Hills, Jumeirah Golf Estates, Marina, downtown, whatever. They've said, I'm going to live in JVC because I want affordable luxury. So if they're going to come to JVC, they're going to be renting or buying that apartment. And if that is the case, then they want, like I say, affordable luxury, but size, you know, unique offerings. How is the building? So yeah, basically JVC is massively overcrowded with very average products. I wouldn't recommend buying off plan there. I do see now a huge supply coming to the market. There are over 9,000 rental listings online and over 8,000 purchase listings online, maybe even more. And this says to me there's just going to be an influx of supply. But if you are sort of buying in that 1% mark, I'm talking from high quality developers, Ellington from some of their projects, Iman, Imtiaz have known to do well in the market. So as long as you sort of own in these type of developments from these sort of higher class developers is what I say, you'll be all right, okay? Now moving forward, like I say to you, if you wanted to buy off plan in JVC, I'm not the guy for that, but these are the figures that we've sort of saw. So to conclude, if you wanted to buy there, I would only be going for 2 or 3 bedroom, something on the luxury side, something a little bit more upmarket. And be aware that if you are buying studios and one beds, you are going to be facing a risk of oversupply. And in my opinion, I think JVC's prices may flatline or decline depending on the price you bought for. If you bought a few years ago, you'll be fine. But if you're buying today, I don't believe that the growth is what people are going to promise. Now, this next one might surprise you. And personally, this is a little bit more of a personal preference, but also combined with some data. This is the Dubai Marina. Again, somewhere else where I used to live. Now, I don't mind the Marina. I don't mind occasionally visiting, taking a walk around, going to some restaurants. But living there now is more hassle than what it's worth, in my opinion. I think traffic build-up, poor infrastructure, and a few other reasons have kind of led to its potential decline. So let's get into it. So over the last 2 years, we sort of seen the price peak at around 1,900 across the board. Of course, there are individual developments that have continued to perform well. But honestly, when you look at the graphs and you look at the data, there's been quite a lot of stagnant growth. And that's been in the last 2 years. Now, over the last 2 years, we've seen a bustling, booming market, and we've seen areas emerge and grow rapidly. But the Marina didn't really perform super well, all right? It did all right, and it definitely appreciated, but its growth over the last 2 years just didn't sort of match overall growth in Dubai. So it's one of those locations where there's no prime plots left. That's pretty obvious. So any new developments we've seen come up now have to offer something extra special. I mean, there's only one I want to talk about, and that's the Six Senses. I've spoke about it in previous videos. You know, I very much believe in the brand. I think it's got a lot of potential. It's offering a kind of brand that people really want and know about around the world. But realistically, there aren't any prime plots left. Any plots that were left, they've been taken up, and they were in between buildings. You know, they don't have real true views. You know, there was nothing left on the canals. You know, the canals were taken up many years ago. And if you take a ferry or a boat down the canal, now you see a lot of the buildings that are on there, and they're just really old, ugly, out of date, out of shape buildings. So it's just becoming one of those areas now where I still believe for a tourism area, it performs amazingly. It's near Blue Water Islands, it's near the beach, close to the palm, all those kinds of things. But if you're buying into this location now for appreciation and like continuous growth, I think it's going to stagnate, in my opinion. I don't think this is the place where you as an investor would be buying off plan, unless, like I say, if you're buying into a premium branded residences, because there are none of those. There's only 3 buildings that continue to perform well, and they're all the Marina Gates and the Jumeirah Living Gates. Apart from that, there's just not that much really happening over there in terms of growth. So if you're looking for general real estate in the Marina, I wouldn't be putting my money there. There are, as I mentioned here, more prime waterfront communities to choose from that are still undervalued. I mean, a quick comparable is Dubai Creek Harbour. This location, built by Emaar, is almost like a new marina, in my opinion. Location-wise, it only suits a certain type of person. It is quite isolated until they have the new infrastructure and the roads that do connect the city to the creek. Then it'll be better. But I mean, if you walk around Dubai Creek Harbour and walk around the marina, you can already feel the difference in, you know, newness, if that's a word. And that's what, for me, is kind of pushing people towards these new emerging waterfront communities. And that's why I think the marina is somewhere where it could potentially be stagnant and it isn't going to grow as fast as anyone is promising. Now for the exciting part, let's go to the area that I think will perform the best and continue to grow throughout the Dubai market. This is the one you've all been waiting for. What's not going to crash, Joe? What's the best thing to buy in Dubai in 2026 or even the UAE? Right now we're stood in a master community. Now for anyone who does not know what a master community is, it's what I spoke about before. Remember when I talked about like Dubai has a, let's say, a macro economy, and then you've got micro economies within it. Master communities are those. You know, there are so many reasons why so many people like living here, right? You know, the proximity to schools, malls. I mean, look where we are now, walkability. You know, the feeling that you're not necessarily in Dubai. It's like a home away from home. Currently, we're stood in Arabian Ranches, and there's a number of master communities that are known to perform well. Primarily, Emaar have built the best communities, but also now we are seeing other developers emerge with great communities, and they're essentially what's driving the market in these locations up. You know, whereas we might see certain stagnation in, you know, other locations which are talked about and an oversupply, well, you can't replicate these. You know, to replicate a master community versus just a tower on its own, you know, we're talking 50, 60, 70 million square foot of land and, you know, creating an entire economy, okay? Like creating an entire mini city, like a mini village. So in 2026, the strongest investment you can purchase is in a master community. And what you buy in there, whether it's a townhouse or a villa, it's not going to fail you, okay? Now, in this next part, I'm going to actually break down my top favorite investments coming up into the market, why I think they will perform well. All right, so let's go and talk about that. So these are the off-plan investments that I recommend right now as an investor. Okay, so what's upcoming and what's currently launching, and this is what you need to watch out for. So I'm going to start with probably one of my favorite, because I've spoke about it a lot of times. Sold over 35 million dirhams worth of property on here in the last couple of months. That's Hodeiria Island in Abu Dhabi. This is a product which I feel like a lot of people are sleeping on, but now they're starting to understand the value is so good for the money in terms of what price per square foot. You get a villa that is located on a natural island close by to the beach. You're talking like Al Naseem villas, which are sitting on between an 8,000 and 11,000 square foot plot, okay, with 5, 6, 7,000 square foot built up area, okay, on an island with, sports facilities, schools, malls coming up, shopping centers, everything you can imagine. And the price of this is between 9 and 11 million dirhams on a 40-60 payment plan. The average price per square foot is around 2,000 dirhams, okay? That value is there. Okay, that's what I would be putting my money into now. But if we look at Dubai, because some people are just, I don't want to buy in Abu Dhabi, what can I buy in Dubai? Well, we know that Imara are going to be launching new Oasis villas very soon. It's very exciting. We know the success of this project so far. People are already cashing in and making a profit. This is going to be Imara's flagship product of the year, okay, or of the next few years, because it's going to be ready in 2028. Price is trading between 2,200 and 2,400 dirhams per square foot. Still incredible value. And then we're going to talk about Jumeirah Golf Estates 2. All right, this is Al Wasl's flagship product. Okay, they already had an amazing success with Jumeirah Golf Estates 1, and now they're going to move into the number 2. All right, we're going to see golf course villas. We're going to see another state-of-the-art golf course. See malls, again, schools. They're building an entire master community. All right, and then we can also look at Grand Polo by Amar, equestrian themed. Whereas Oasis is lagoon themed, Polo is equestrian themed. And again, sitting around the 2,000 dirhams per square foot mark. So what do all of these have in common? I've just told you the price per square foot are ranging from, let's say, 1,900 to 2,300 dirhams per square foot. But where I am now in Arabian Ranches, okay, we see renovated villas, upgraded villas, now touching between 3,000, 3,500 dirhams per square foot. Jumeirah Golf Estates, we're seeing transactions hit above 4,500 to 4,800 dirhams per square foot. So what we're actually seeing in these master communities is that the price per square foot for an off-plan villa is cheaper than the ready market today. Now, all of the other places that I mentioned, the off-plan is more expensive than the ready stock. So to put it into perspective, if you actually look at the data and look at what you're buying, to be buying into these villa communities, you're actually getting a far better deal where there is going to be appreciation, okay? We know that the rental yields are steady. We know that people, that the drive and demand behind them is families, okay? We're seeing this incredible growth. When we mentioned, this huge influx of apartments coming to the market, well, only 11,000 of those are going to be villas over the next number of years. Okay, that's very small compared to the amount of apartments that are coming to the market. So to conclude this video, this is not to put anyone off apartments, by the way, because, apartments can still be a very good asset. People will always want to live in them, right? Not everyone wants to live in a villa, that's fair enough. But if you're going to come to me and I'm going to suggest you something, we're going to look at townhouse communities, we're going to look at villa communities, or we're going to look at prime waterfront properties, which we didn't really speak about, but there's not an abundance of them in the market right now. There wasn't anything screaming out to me that I would invest in myself. So if you come to me, we're going to strategically break down what I think is the best investment in 2026 moving forward. Okay, what communities and why they are strong investments. And for someone coming to this market for the first time, be careful, make sure that you do your research. If you're going to look at data, make sure it's backed up by real-time knowledge, not just looking at only numbers. Find experts, come to us. We'd be happy to work with you and sort of break this down and build a strategy. And I look forward to seeing you in the next video.